How you doing? It's Clayton Tini from the First Home Buyer Club. 100 lessons in 100 days. Day 7, lesson 7. What I want to talk about today is understanding your debts, know when to consolidate them, know when to pay them off faster, and create that plan. So I'm going to keep it short and sweet today. I'm only going to talk about 5 points. And firstly, what we're going to start about, which I spoke about, is create that plan. Understand what the goals are. So if your plan is to buy property in 6 months, 12 months, 3 months, whatever that goal is, let's work out how we're going to get there. So if you're short of funds, let's work on putting all that extra money into savings. Get it, build it up, and get to it. Ultimately, rent is still a form of debt, right? And so, with some of our clients, their concern is got to get out debt free before we consider buying a property, because I'm paying, I'm going to pay another $5,000 of interest over the term of this loan. But you're paying $20,000+ each year to your landlord just to live there. So understand those numbers. But that doesn't mean put yourself out financially and take on all this debt just to get into a position to own a home. You still need to be smart about it. So 1, create the plan. 2, understand the numbers. So a good point that I want to talk about, and from time to time, you might have a car loan and a personal loan and maybe one of those store cards with the TV and the couch and the other things that you purchased, and maybe a credit card. And when you bundle all those debts together, and I use the example of clients of ours, Dave and Jeannie, a couple of years ago, they had approximately $19,000 worth of debt. Now, because they'd saw different lenders for a car loan and a personal loan and all the rest, that for that $19,000, they were actually paying $2,200 a month in repayments. So at times like that, and understanding the numbers, knows that we can consolidate those debts, and instead of paying $2,200 a month, we sent them to a broker, a finance broker, and they consolidated their debts, brought it down to a little bit under $600 a month. So it's a saving of over $1,600. Now, obviously, we've extended that to 7 years. I think they had all up around 2 to 2.5 years to go on all of them. But the plan is, when you get into the home, and obviously we got into the home, they're paying less in debt and less in mortgage repayments than what they were paying in rent and in their debts. What we did is, once we got them into the home, then we focused on paying all those bad debts off first. No matter what happens when you get in the home, they're the first debts you should be paying off, because they're the ones that generally with the higher interest rates, the 10s, the 15s, etc. So they're our goal. Pay them off first and get rid of them. Third one is, we've sort of covered this, but reassess your finances, especially with credit cards. There's like interest-free credit cards out there, and there's companies that are offering those incentives so that you can pay off the debts without actually having to pay interest. Look them up. Make sure you stick within the time that they allow, though, because normally the interest rate on that loan after you reach that interest-free period just skyrockets. The fourth one, restructure your debts. I've spoke about that. Look, there's going to be times when consolidating your debts financially is going to put you in a way better position to, 1, purchase property, but 2, free up money for day-to-day expenses. But then obviously once we get you in the home again, we're going to pay it off fast. And the last point is, the final end game with anything debt related is always to be debt free. So no matter what happens, if you have a 7-year personal loan, you have a 30-year mortgage, that doesn't mean you have to keep it for 30 years and a personal loan for 7. Once we get you in, let's start focusing on spare money, getting in to pay off those debts faster. Because when you're debt free, you've got a lot more cash to make other decisions in your life that you want to. Remember what I said yesterday, though, don't be a debt junkie. Just once you start paying off a debt doesn't mean that you can automatically go out and buy something else on finance just to get to a point because you're always used to it. All right, guys, hope you enjoy the rest of your Sunday. I'll talk to you later. Bye.